In this video we're going to show you how to use Fibonacci as correlation tool. As I mentioned before, we use Fibonacci as correlation tool because using only Fibonacci is insufficient. We focus on the most important levels as 0.382, 0.5, 0.618, and then try to align them with other elements. First, we need to identify a swing move, that is a move from point A to point B. We know already that after the main swing there should be a correction in the opposite direction to point C. Now we look at the chart to find if we have other correlation that converge with our important Fibonacci. First, we notice a support and resistance level. Just below this level, we have a strong demand zone. Both correlations are located between 0.5 and 0.618 Fibonacci levels. As we know, the 0.618 is the golden ratio and is the most important Fibonacci level. If we enter 0.5 Fibonacci, your stop loss should be below the demand zone, the same if you enter at 0.618 Fibonacci. The second entry has the higher risk reward, and I will suggest to choose that if you see a similar scenario in the future. Of course, that going to be cases that price will bounce from 0.5. We must accept that. Our goal as trader is to choose the best risk-reward trades. Another option is to split the position size on both these levels. As we can see, price bounce from 0.5 Fibonacci. If you missed the entry, do not panic yourself to enter after the first impulse. Market will always pull back and will give you new opportunities. Price touched 0.618 Fibonacci inside demand zone. This is our entry level in this trade. We put our stop loss below the demand zone and furthermore below the 0.786 Fibonacci. The stop loss can be tighter, but we preferred more conservative one. Next goal is to define our target. We are using Fibonacci extension and other corrections as we did on the entry level. We have minus 0.27 Fibonacci that correlate with a supply and resistance level. Fibonacci is very helpful tool in reconfirming sensitive level, like in this case resistance level, that will serve as our target. The bounce from 0.618 Fibonacci was very strong. We see that price break out the parallel channel formed in the correction phase. If we enter at breakout and use a conservative stop loss at 0.618 Fibonacci with the same target minus 0.27, the risk reward will be less than 2. Personally, I enter when the trade offers a 2 risk reward trade or greater than 2. Price reached the target perfectly. Now we have a sell opportunity. Price is rejecting minus 0.27 Fibonacci that correlate with the resistance level 2. Very important note. Don't use a tight stop loss because this is a reversal type of trade and price can come back for another touch. To define our target, we are going to use the next demand zone and correlate with powerful Fibonacci as 0.618. As we mentioned before, in this type of reversal trading, be aware of stop hunt. Don't be eager and use tight stop loss, because you will get much more losing streak and will affect your emotions and performance. In this case, our rational stop loss saved us, then price dropped sharply. If you miss the first entry, do not worry because price pull back most of the times and offer us again the opportunity to enter. Price pullback at support and resistance and supply and demand zones. Mark these zones, put price alerts and wait for price to reach them. In this example, price pullbacks at supply zone that was near with our entry. As you see, even though you missed the first one, market offered you again the same opportunity. After that correction, price made the second impulse in downside direction. Price reached the target precisely at 0.618 Fibonacci, that correlate with edge of demand zone. There we can enter a buy trade. We have almost the same setup as the first one explained in this video. A correlation between 0.618 Fibonacci and demand zone. The stop loss level is recommended below this demand zone. Related to Fibonacci levels in this chart, it's recommended below the 0.707, even more rational, below 0.786 Fibonacci. We are re-evaluating our potential target in upside direction. We have the first supply zone that correlate with resistance and 0 Fibonacci level. Next target is second supply zone that correlate with 0.27 Fibonacci level. Just below this level we have a resistance level. Price reached the first target sharply, consolidated for a while at resistance level, and then reached our second target at minus 0.27 Fibonacci level. Always re-evaluate the chart after a closed trade, and search for new opportunities. As we see price has created a head and shoulder formation, our goal is to wait for pullback at neckline, or other sensitive areas such as a demand zone. To define which of these zones has higher probability than others, we use Fibonacci retracement. We have 0.5 Fibonacci that correlates with neckline and 0.618 Fibonacci that correlates with demand zone. We see that price rejected 2 times the zone near 0.5 Fibonacci, creating in this way a double bottom pattern. We also have a trend line breakout and retest. Market is giving us a lot of confluences for a buy trade. To define our target, Fibonacci is one of the best tools. We prefer minus 0.27 level as our target. Price reached the target sharply and then rejected in the same way.